I really view the bank now as part of our team.
In the very recent history, minorities were not banked by the majority banks. So a lot of community banks filled that void.
Access to banking services and credit are essential in today's society. So what role do community banks serve?
I'm Kim Clark.
And I'm Pat Werhane.
We go out into the world to look at everything.
Topics such as food deserts, wage theft, and recidivism in jails.
Access to healthcare, education, welfare, major issues we face at home and around the world today.
Come search with us for answers to these issues and more
as we discovered new answers to today's big questions.
If you get sick, get broke, no jobs, no joke. Got the wrong skin, wrong if you live in hands, long shots, cholesterol, cellulose, can't buy your own. 1 in 3 Americans at 30 million. Got no hope, can't cope, no credit, no bank at all. Get on down to your local community bank.
If I talk to 25 people who happen to be of a certain generation, and you ask them what's their first memory of a bank, it is walking into a community bank, maybe with a parent, maybe with an uncle, maybe with a grandparent, and opening a savings account and getting that passbook.
$10.
Right, that $10.
I did it.
And on Saturday, doing that trip to the bank. You cannot change the trajectory of your life unless you have a banking relationship. That's just a fact.
But 20% or 25 million U.S. households have limited banking services and rely on check cashing stores, loan sharks, and payday loans. A further 10 million households have no bank account at all.
Majority banks maybe didn't know the neighborhood. There may not have been familiarity with the community, and community banks fill that void in so many ways. It's an important part of the financial system.
Community banks are typically small. Their asset value is normally less than $1 billion. Deposits up to $250,000 are protected by the Federal Deposit Insurance Corporation. The number of community banks has fallen dramatically in the last 20 years, but they still comprise nearly 96% of all banks in the United States. The 4 super banks left after the carnage of 2008, these are the banks deemed too big to fail. Community banks are the primary source of lending for agricultural loans and make 40% of all small business loans. In Frank Capra's iconic film, It's a Wonderful Life, Jimmy Stewart plays the ideal community banker, George Bailey. His life's work at the family bank is the development of his community, financing construction, providing mortgages, supporting and welcoming new families and businesses, making small short-term loans to tide people over, keeping a cool and level head in financial crises, reinvesting the bank's profits back into the local neighborhood, and defending his town against speculators and banks only driven by profit. While banking methods may have changed, can the spirit of George Bailey still live on in modern urban America? Chicago has changed dramatically in the last 100 years, the city growing and changing with each new wave of immigration. South Shore is an area 9 miles south of Chicago's Loop with a population of around 80,000 people. It has had shifting fortunes in its history, but was always a tight-knit community. But by the 1970s, with the collapse of the nearby industries and a rapid change in its ethnic and social mix, many people and businesses left for the suburbs, leaving a neighborhood going downhill with all its attendant problems of destitution and an average crime rate double that of the city. With this decline of the neighborhood and faced with the exit of its one last remaining bank, one man, Ron Grzywinski, had a plan to save the community.
And we did a number of things to combat that notion of deterioration becoming a self-fulfilling prophecy. That what usually happened in those communities were that institutions, whether they were schools, hospitals, police departments, realtors, everybody believed that a neighborhood was going to deteriorate, and they therefore behaved accordingly, so that realtors began to put up security fences. They began to collect rents in person rather than through the mail. Hospitals responded in a way that which can only be described as racist today. But in every way, institutional life was affected. And banks stopped lending. I mean, this was the FHA, the Federal Housing Administration, actually had redlined neighborhoods. It was federal policy that the FHA would not insure loans in neighborhoods that had a high percentage of minority inhabitants. And so that was the situation. I was able to hire Milton Davis to be the head of that activity. Milton had been the head of the Chicago chapter of CORE, had a very deep knowledge about race relations in America, and was an absolute godsend in terms of everything we did for the rest of his life and for the entire duration of Shore Bank and even to this very day. Mary Houghton came next about a month later, and she is very much alive and still very involved in the issues.
It was the time. It was the late 60s. There had been riots. People were beginning to talk about private sector solutions to urban problems. And Ron was the president of the Hyde Park Bank, and he had this big idea of creating a small business lending department for African American businesses on the south side of Chicago. And so it sounded good to me.
And Jim Fletcher came a year later. Jim grew up in Ida B. Wells public housing on the side of on the south side of Chicago. And Jim and Milton were friends, and Jim was a deputy director of citizen action programs in the 6-state Midwest region. And after President Nixon was inaugurated, Jim saw the beginning of the end of cap agency programs and the Office of Economic Opportunity.
The big reason why Shore Bank is different than other banks is that all the investors were recruited, just chose to invest because they believed, they agreed with what we were asking them to do, which was to invest not only for a good financial return, but also for social, and then later investors for social and environmental return. So the core business of Shore Bank was more than only community banking. It was community banking and community economic development, community banking and sustainable development. So it was not a peripheral charitable activity of the bank. It was its core business. We were going to prove that a bank in a community could affect the market in that community and cause something which was going down to go back up, and that the markets would get normalized by the result of the bank and any other investors it could attract in the neighborhood. The bank was acquired in 1973, and it probably was a decade later that we sighed with relief that we could see that things were really getting better in South Shore. The major impact that the bank had was its effect on this very large number of rental properties that existed in the South Shore neighborhood. South Shore had 30,000 housing units, and 24,000 of them were in walk-up rental. So it was a big concentration. Nice buildings, 3-story brick walk-up buildings, 18 units, 24 units. And they hadn't gone all the way down, so they could be recovered and rehabilitated, and the bank really did cause ultimately that market to normalize.
Shore Bank went on and worked initially only on the south side of Chicago, only in the South Shore neighborhood. But after about a decade, we started to work on the west side. But we were also asked by then, 10 years later, in the mid-'80s, to go to Arkansas. Governor Clinton asked us to go, and we started a rural version of Shore Bank to do economic development in rural areas and rural communities of Arkansas. We were also asked to go to Bangladesh and help the Grameen Bank get started. It was had been launched as a class project, and it was already a not-for-profit organization, but was about to get a bank charter, and so we did that. Then that work continued and just kept expanding, and that's the story of Shore Bank.
When the financial crisis of 2008 hit Chicago, Shore Bank kept calm and did its best not only to protect its own customers, but also those trapped by punitive interest contracts.
But as a result, its customers who had those loans because they went elsewhere came to Shore Bank looking for help, and working closely with our mortgage lender, we created a program that I coined a rescue loan program that was helping customers get back to that original monthly payment that they could afford and what they understood that they had signed on for in order to stay in their home. And Shore Bank made approximately 150 of those rescue loans. That means 150 families, not 150 people, 150 families, either individuals and with children, people of all ages, that were able to stay in their home and not lose their home or have to move as a result of that property being a distressed loan.
Now, providing help for homeowners in trouble. NewsHour correspondent Elizabeth Brackett of WTTW Chicago begins our coverage.
The boarded-up homes tell the story. Foreclosures in largely minority neighborhoods on Chicago's south and west sides have tripled since 2004. But the people in this neighborhood may have a second chance.
We're here tonight to let you know that Shore Bank is committed to the people of these communities, and if you're in a situation where you have a mortgage that you didn't know what kind of mortgage it is, or if it's adjusting, or if it's a high-cost loan, we're here to help you with that.
Loan director Michelle Collins meets with community groups several nights a month to let them know about Shore Bank's new rescue loan program to refinance mortgages in danger of default.
Despite a performing loan book, as the economy went into free fall, Shore Bank, like most other banks, found itself needing capital to maintain its mandated liquidity levels. Their plight was seized upon by politicians of both the left and right, and they fell between the gap of competing ideologies about federal intervention in the heat of the financial meltdown. Despite backing by investors and larger banks, the modest funding Shore Bank required was denied, and they tipped into bankruptcy in 2010. The Financial Crisis Inquiry Commission, set up by the president to examine the causes of the 2008 crash, exonerated both the Community Reinvestment Bank and community banks. They were not responsible for the devastating ballooning subprime housing bubble. So what did cause that crisis? Let's recap. Subprime balloon mortgages were aggressively sold to people by the national banks using self-certification by commission-based sales teams, whose banks did not hold these loans but bundled them into bonds they sold to other investors, creating a secondary market, undermining accurate rating of risk in the largely unregulated market, and creating a culture of profit maximization with apparent no downside risk because of federal protection, threatening contagion of global financial markets that meant these very banks were too big to fail.
People's political philosophies certainly have a way of making Shore Bank like a hot button issue, and you hear some like complete hagiographies for the bank that, oh, they were wonderful, they were saints, they did everything right. And you listen to some media from some political persuasions and they were like everything that's wrong with America. But you know, I always at least come back to, you know, they were trying to do something good, and they really, really did a lot of good for many, many, many years, right? Only the second worst financial crash in American history, like only the Great Recession was able to put a stop to this temporarily and it had to reinvent itself.
Was this the end of the Shore Bank vision? Well, its philosophy, values, and vision live on as local people rallied to save the Shore Bank branches in their areas, with new banks dedicated to investing in their communities.
Urban Partnership Bank was formed in August 20th, 2010. Everybody knows about the much storied Shore Bank. Unfortunately, around that time, Shore Bank failed. I was actually part of the capital campaign. There were a team of people who were concerned Chicagoans who came in to help them try to raise some capital. And we actually were pretty successful in doing that. But unfortunately, Shore Bank did fail, and there was going to be a void in the community. So a couple of the principals of starting Urban Partnership Bank really felt that we could do some things since the capital had already been accumulated. Let's start a new bank to fill that void, the potential void in the community. And we were able to get that done. But we focused on low to moderate income areas. We've been able to build a good book of business. We're doing good business while we're doing good. We're focusing on making sure that we lend capital in capital-starved communities in order to create jobs. What we focus on is small businesses. We focus on commercial real estate developers. Make sure you have good, solid housing in some of these areas. It's actually very rewarding work when you can see the projects and you can see how many new jobs are created. And you can actually make a neighborhood transform. It takes time and it takes capital, but you can do that.
Lake Park Crescent was the redevelopment of what were the lakefront homes. These were several gallery-style concrete high-rises, facing the lake. Had really became, undersubscribed. Had lost population, had suffered from deferred maintenance, and ultimately were torn down. The Lake Park Crescent then was, almost the antithesis of that. Instead of high-rise concrete homes, you then had, everything was low-rise and some mid-rise product. I think if the CHA had their way, they do entirely low-rise because the goal was to create a much more new urbanist type environment in all of these communities, and they felt they could only do that by creating a more typical Chicago setup for housing. Personally, I think the plan has been a phenomenal success. Right? It's kind of looking at what worked well in the past and what helped create a sense of community. And often the things that are attributed to that are making things pedestrian friendly, having sidewalks, places where people can meet, encouraging people to get out of their home, to have public space, to have private space that overlooks public space, porches, things like this. In some sense, replicating, I think taken very literally, some people, turn these into very historic-looking communities. Having certainly park space is another big element. We built a centralized park, designed that in the plan, from day one, and it was one of the first things that was built too. Sometimes parks are something that's added later. We thought it was important to have that park space early on. But from a street layout structure, for me it was pretty simple. It was seeing what the rest of the community looked like, taking the good cues from that and implementing a more traditional Chicago street grid, a more traditional Chicago style housing type, having alleys that allowed garages and things to be kept out and garbage to be kept out of view. Nothing that in totality you'd sit there and go, oh my gosh, that was so they had such foresight to do this. We were effectively doing things that have been successful for 100 years. Here we are today now with a successful project that frankly is lauded by the housing authority here as being one of the premier examples of mixed income housing. They take other housing authorities on tours of it from around the country. I mean, it's certainly something that Draper and Kramer is very proud of. I'm not sure that we'd be in this situation exactly if it weren't for people like Urban Partnership Bank who helped stave off a very serious threat.
I mean, we have a nice little graphic that we put together that's really a circle that you try to loan money in the business community, and what happens is you create employment and you try to bank the employees, and that in essence creates the kind of environment where people buy homes and more businesses are attracted to, because you have people that have income that want to spend money. And then what happens is, bank gets paid back, and then you invest more in businesses.
And then you invest in more.
Right. And so
well, we were able to secure a line of credit with Urban Partnership Bank that really allowed us to get this project done. The timing was right. We were fairly new in the relationship with the bank, and because of that, we were able to take this project on. So, a lot of times you have the capability to do the job, you have the capacity, but you may lack the capital to get it done. And with our relationship with Urban Partnership Bank, we were able to be confident in our ability to handle the payroll and the other supplies and purchasing that came with doing a project of this scope and this scale.
Do you see the bank doing a sort of, well, they wouldn't be micro, but small loans too, as well as?
If we can do consumer loans that are responsible consumer loans, we're going to do that. We actually have a product that is backed up by, it's a collateralized product, because a lot of people who need that bridge financing are actually working. They could be a school teacher whose washing machine broke, or they need $1,500. The last thing you want a professional, a person like that to do is go somewhere and pay some astronomical rate and put themselves in hot water. That's not what you want. People are trying to do the right thing in their lives. A financial institution should do right things as well.
Shore Bank branches on the West Coast were reborn as the award-winning Beneficial State Bank, with the focus on social justice and the environment. As CEO Kat Taylor explains,
our bank was founded in 2007. It is a triple bottom line bank that serves social justice and environmental well-being at the same time that it's financially sustainable. It is a for-profit bank, but all of its economic rights are held by One Pacific Coast Foundation, which is mandated by its bylaws to reinvest profits in low-income communities and the environment that we serve. 95% of what we do, though, is make loans to companies and nonprofits who are meeting human needs in a way that's now socially just and environmentally sustainable. So that's very different in that we have this commitment to the triple bottom line, and our ownership structure, that dedication of all our profits to a nonprofit, is very, very unusual as well. In addition to it creating a virtuous cycle of reinvestment, it also eliminates the pressure of a private shareholder to insist that we maximize their profit at the expense of our other critical bottom lines. At any point in time, 75 to 80% of our loan outstandings, those are actual dollars in transformative actors' hands, are serving one of 9 to 11 sectors that we think are transforming into the new economy and protecting and regenerating the environment. So sectors like affordable housing, renewable energy, sustainable food and fisheries, those kinds of actors.
What we say to our employees is that we want to focus on the communities that we serve and really take it back to the original tenets of community banking. And people understand that, and they really do understand that. We talk about the potential of the neighborhoods. We talk about what the neighborhoods used to be. I think that the big banks, no disrespect to big banks, are focused on a different market segment. I believe that there's an expanding market segment in the low to moderate income that is urban, and that market segment has not been addressed well by banks. Banks will admit that they don't address it well. By default, payday loan stores, cash banking stores, merchants who cash checks actually service that marketplace to the point we're probably in the third or fourth generation of people that use cash banking stores. Now, if you can create a bank that is urban-centric, understands the neighborhoods, understands where they want to play, and can become importers of capital into these areas, I think you can have a very successful business model. 15 years from now, I'd like to see Urban Partnership Bank in multiple urban areas, in low to moderate income areas, but neighborhoods, doing community banking there.
Capra's dream of building communities is perhaps still alive, guided by the same philosophy, same values, and the same trust in the self-reliance of a neighborhood to help themselves with the help of their local community bank.
The knowledge that that local bankers had when there was not almost or universal branch banking was much greater than it is today. The good old-fashioned bankers were people who were extremely proud of being able to use their resources to improve their community, to create jobs in their community, and to be profitable in the process. And that was the way this country was built.
So can access to credit be considered a fundamental liberty? And if so, is this the beginning or the end for the community bank?